Good afternoon. Welcome to Halftime Report. I'm Sonia Shenoy. With me is Ekta Batra and Mangalam Malu. Very, very quiet, uninspiring and insipid market at the moment. No recovery at all after what we saw yesterday. And, still a tad bit above the budget day lows, but nevertheless, no recovery after 7 or 8 days of a fall in the market. In fact, the mid-caps are seeing a little bit of a bump up, and there are a few stocks. Adani Group stocks have recovered from the lows. Auto stocks are up ahead of the sales tomorrow. But largely, you'd have to say the mood is not exceptionally buoyant. It leaves a lot to be desired, I guess.
Well, it leaves a lot to be desired, but at the same time, there is a lot which is happening beneath the surface. You know, from the frontline end of things, yes, the Nifty is around the 200-day moving average. The Nifty bank to holding on to the recovery that it saw yesterday. But the mid-cap end of things, it's outperforming today. We have the mid-cap index up around 0.6%. And some of these stocks are doing extremely well. Something like Uflex, which was underperforming, JSW Energy. We have RateGain, which is up around 6% as well. But a bunch of stocks also declining. Case in point, something like Paytm down 8%. SpiceJet, after a bump up yesterday, down about 6.5% today as well. And Olectra Green Tech saw a big move over the last few trading sessions because of the green hydrogen buses. Now, that one's coming in for some profit taking as well, down 5%.
Yes, absolutely. So I think it's a lot about stock-specific action, and at least in the near term for the Nifty, the support would probably be at around 17,300 or 17,299, which was the intraday low yesterday. So let's see whether that is managed in terms of a protection or a support for the Nifty. But nonetheless, consolidation is the name of the game. We have a lot of stocks in focus today. Sadly, we have Cipla, Dr. Reddy's, both down and out from the Nifty space in the pharmaceutical segment, but even others such as Vedanta, Paytm, Bajaj Auto, for example, is managing to hold up after what was quite a dismal day yesterday. So a lot of stocks to discuss in the next 60-odd minutes. Let's start with Vedanta, which is in focus. It is sluggish in trade as yields on the parent Vedanta Resources bonds have surged. Nigel is here with the reason why. Nigel.
Well, let's run you through the key data points. What's plaguing Vedanta Limited? That's the Indian listed entity. The fear is that Vedanta Resources, which is the parent, could potentially default. And that fear has come about because the yields on the bonds that are traded, they have moved up to around 35 to around 40% approximately. So that's the fear out there. And in the first half of this fiscal, that's FY24, they have maturities of close to around $900 million. So that's the fear out there. The second factor is, how does it impact the listed entity? Well, Vedanta Resources, that whole stake in Vedanta Limited, and the promoter entity comes up for you. The holding is large. The problem is most of it is pledged. So if in case the shares fall, the fear is that in fact, it could trigger some bit of selling. That isn't the case as of now, but that's the fear as we speak. So that's why, the stock is under pressure. Thirdly, the big, the most important trigger was Hindustan Zinc goes ahead and buys Vedanta's international zinc business for around $3 billion. Now, the government of India has, opposed this. So that $3 billion deal goes out of the window. Can they come up with some kind of solution where you get the cash out of Hindustan Zinc's books into Vedanta Limited and they in turn pay the money to the promoter entity? That's something we'll have to see. But for the time being, the fear is that Vedanta Resources, the promoter entity, could potentially default, which is further putting pressure on Vedanta Limited stock price. But I've seen this in the past, in the last many years. And somehow or the other, the promoter entity wriggles its way out of it. So let's see what cards they have up their sleeve, whether it's a refinance, whether it's pulling out some cash from Hindustan Zinc. We'll have to stay tuned, but that's the fear that's playing out.
Okay, thanks a lot for that. For now, the street is not convinced, down almost about 7.5%. But moving on, Z Entertainment is surging in trade as the exclusion of the stock from the F&O segment stands withdrawn by the exchanges. Vivek is here with details on that. Vivek, over to you.
Well, absolutely. Z Entertainment, a technical positive as far as this name is concerned. So on February 23, NCLT had admitted Z Entertainment under the IBC, and on the same day, NSE had said that, May series onwards, Z Entertainment would be excluded from the F&O trading segment. However, the NCLT gave a relief as far as he is concerned, and yesterday, post-market hours, there was a notification to the exchanges where NSE withdrew that circular. Two important developments for Z that needs to be tracked. In the earlier circular, May series onwards, there would be no fresh contracts. And the second one was requirement of 100% margin upfront payment that was required. So given the fact that both of these now stands withdrawn, it's a technical positive as far as Z is concerned, and no wonder the stock is doing very well in today's trading session.
All right, Vivek, thanks a lot for that. Meanwhile, just keep an eye out on Berger Paints. That stock's moved to the high point of trade. Remember, the management joined us on CNBC-TV18 yesterday, indicating that they would see double-digit growth in the fourth quarter, and that continues in FY24 as well. So as a result of which, there is some buoyancy in that stock, up around 2.9%, 16 odd rupees in absolute terms. But the other stock on our radar, Vesuvius, is the one that tanks in trade on the back of slowing revenue as well as margins in the fourth quarter of calendar 2022. Nigel?
Well, that's right. You know, if you look at it on a year-on-year basis, the numbers look good. The problem is there is a degrowth on the top line, both on a on a sequential basis, a bit of a degrowth that we've seen out there by close to around 5 crores odd, and on the EBITDA front, there's a big degrowth. So that's why the street is a little bit nervous out there. And the margins that were in mid-teens, 14% in the previous quarter, they've come down to around 11%. So on a year-on-year basis, it looks good, but still, in fact, you know, on a sequential basis, it's lower, which is a little bit disappointing. The other news was that they appointed a new CFO who has an investment banking background, but that's failed to enthuse the street at least as of now. The valuation picture should come up for you. The stock trades at around 29-30 times its trailing earnings. So valuation concerns, point number one. The second factor is you just pull up a 1 month chart. Even after this 11% cut, the stock is down only around 1%. That means in the run up to this, to these results, the stock, in fact, was up close to around 10%. So it's some profit taking, high valuations, and margin disappointment. The three factors that explain why the stock is under pressure.
Okay, all right, Nigel. Thanks very much for that. So that stock is down around 10.5% odd. For the markets just about consolidating, we have the mid-cap index, which is up around 0.5% odd, and an advanced decline ratio, which you'd have to say is currently even keel. We'll take a short break. On the other side, we'll put the focus on stocks such as Cipla as well as Indiabulls Realty, which are making news.